Okay, so you want to own a ranch in Britain. Except, before we go any further, let's actually deal with the word itself, because it is doing a lot of misleading work here. Britain does not really have ranches in the sense most people picture when they hear that word. Thousands of acres of open range, cattle roaming across land that stretches to the horizon, a cowboy on horseback managing a herd across genuinely vast, privately held territory. What Britain actually has, and what functions as the closest genuine equivalent to that American picture, is the hill farm. Upland livestock farming across the moors and fells of places like Wales, the Lake District, the Pennines, and the Scottish Highlands. Sheep and, in some regions, cattle grazing across genuinely large stretches of marginal, often shared or common land. Picture a hill farmer checking on a flock scattered across a genuinely enormous stretch of open moorland. Weathered stone walls, a working dog, sheep grazing land that has been farmed this same way for centuries. You look at that and you think, this must be a genuinely self-sufficient way of life. A farmer living off the land and the animals on it, the way ranching has always been imagined. Here's the problem. For decades, the actual income keeping a great many of these hill farms afloat has come considerably less from the sheep and cattle themselves, and considerably more from a government check. And the specific system behind that check has just been fundamentally and quite deliberately torn up and rebuilt. Once you understand how deeply subsidy-dependent this specific form of British farming has genuinely been, and what has actually replaced the old system, everything about the real crisis facing British hill farming right now starts to make sense. Let us start with why hill farming looks the way it does in the first place, because the underlying land itself explains a great deal. Upland Britain, the hills and moors where this style of farming is concentrated, is officially classified in a considerable share of cases as less favored area land. A formal designation reflecting genuinely poor natural agricultural potential, thin soil, steep gradients, high rainfall, and a short growing season. Land that simply cannot support the kind of intensive arable or dairy farming that flatter, richer lowland areas of the country can. This means hill farming has, for generations, operated on genuinely thin, natural productivity. A hill farm typically needs considerably more acreage to support the same number of livestock that a smaller, richer lowland farm could sustain. And the actual market value of the lambs and cattle a hill farm produces has, for a very long time, rarely covered the full cost of running the farm on its own. A genuinely important structural reality sitting underneath everything else in this breakdown. Now here is where the naive mental model starts to break down. And it is the single most important fact in this entire story. For decades, hill farming income in Britain was not primarily built around selling livestock at all. It was built around direct government subsidy payments. First, through the European Union's Common Agricultural Policy during Britain's membership, and specifically through the Basic Payment Scheme, which paid farmers a set amount per hectare of land they farmed, calculated largely independent of how much livestock that land actually produced, or how much profit the farming operation itself actually generated. This meant a considerable number of hill farms across the country were, in the most honest financial sense, land management businesses collecting a per-hectare government payment, with the actual sheep and cattle functioning almost as a secondary, considerably less profitable activity layered on top of that primary income stream. A genuinely uncomfortable truth that a great many hill farming families understood clearly themselves, even as the public image of hill farming remained overwhelmingly built around the romantic picture of self-sufficient livestock farming rather than the considerably more accurate picture of subsidy-dependent land management. Now, Brexit, and the genuinely fundamental policy shift it triggered for this entire sector. Following Britain's departure from the European Union, the government committed to phasing out the old area-based basic payment scheme entirely, replacing it with an entirely different philosophy captured in the phrase public money for public goods, formalized through the new Environmental Land Management Scheme. Paying farmers not simply for the acreage they farm, but specifically for delivering defined environmental outcomes: carbon sequestration, biodiversity improvement, water quality management, habitat restoration, and similar public benefit activities. This represents a genuinely profound philosophical shift in what the government is actually willing to pay farmers to do, moving away from rewarding land occupation and traditional livestock production simply for existing toward rewarding specific, measurable environmental stewardship instead. And the transition away from the old basic payment scheme has been phased in gradually, with those direct area-based payments being reduced year on year, creating a genuinely severe, entirely predictable income gap for hill farms that had, for decades, structured their entire financial model around exactly that payment continuing indefinitely. Now, the genuinely difficult bind this transition has created for traditional hill farmers specifically. A great many hill farms are, by the nature of the marginal land they occupy, poorly positioned to simply pivot toward more intensive, more commercially viable forms of agriculture as a replacement for their declining subsidy income. The land itself, remember, was classified as less favored precisely because it cannot support that kind of intensive production in the first place. This has left a considerable number of traditional hill farming families facing a genuinely difficult structural choice: attempt to increase livestock numbers and livestock sales to compensate for declining direct payments. A path that runs directly against decades of separate environmental and stocking density guidance aimed at protecting fragile upland habitats from overgrazing, or pivot the farm's core activity away from traditional livestock production entirely and toward the new environmental stewardship payments instead. A path that can, in a meaningful number of documented cases, actually generate more reliable income than continuing traditional hill farming ever did, but that also represents, for many farming families, a genuine and difficult departure from a way of life and a farming identity passed down across multiple generations, now tenant farming, and this adds a further, genuinely significant layer of complexity specific to a considerable share of British hill farms. A meaningful proportion of British farmland, hill farms very much included, is not owned outright by the farmer actually working it, but is instead farmed under a tenancy agreement with a landlord, sometimes a large private estate, sometimes an institutional landowner. A tenant farmer navigating the shift away from the old subsidy system faces genuinely less flexibility than an owner-occupier might. Tenancy agreements can constrain exactly what activities a tenant is permitted to undertake on the land, meaning a tenant farmer interested in pivoting toward the new environmental stewardship payment schemes may need explicit landlord agreement to actually make that change. Adding a genuine additional negotiation and a genuine additional layer of uncertainty on top of the broader policy transition every hill farmer, tenant, or owner is already navigating. Now, the rewilding and environmental alternative use question. And this represents a genuinely significant, genuinely controversial structural pressure specifically facing British upland farming right now. Because upland land is, by its nature, often better suited to environmental restoration and carbon sequestration activities than to intensive livestock production. And because the new payment schemes increasingly reward exactly those environmental outcomes. A considerable and growing number of investors, environmental organizations, and in some documented cases, the original farming families themselves, have found that converting upland farmland away from traditional grazing and toward rewilding, tree planting, or peatland restoration can, in certain circumstances, generate a more reliable, sometimes genuinely more profitable, income stream than continuing traditional livestock farming on the exact same land. This has produced genuine, sometimes quite heated debate within farming and rural communities, because a shift of this kind, while potentially financially rational for an individual landowner, also represents a genuine, culturally significant departure from centuries of continuous upland livestock farming tradition, and a genuine, practical concern among remaining traditional farmers about losing access to shared grazing infrastructure and shared agricultural support services if enough of their neighboring land converts away from livestock farming entirely. Now we get to the part of this business that actually explains everything else, and it is diversification into sporting and estate revenue. A genuinely important, genuinely distinctive parallel revenue stream available to a considerable share of larger British hill farms and estates. Closer in spirit to genuine ranch-style land management than almost anything else covered in this breakdown. Grouse moor management, deer stalking, and other sporting activities represent a genuinely significant alternative or supplementary income stream for a number of larger upland estates, charging considerable fees to paying guests for managed shooting or stalking experiences. A business built around careful, ongoing habitat and gamekeeper management rather than around traditional livestock sales at all. This sporting estate model carries its own genuine controversy and its own genuine cost structure, considerable gamekeeper staffing and habitat management expense, and it represents a path available primarily to larger estates with the scale and the specific upland habitat characteristics that support genuinely viable sporting activity, rather than a broadly available option for every hill farm facing the subsidy transition described above. Now, the demographic and succession pressures sitting underneath all of this, echoing precisely the succession themes explored across the small-town hardware store and country church, breakdowns elsewhere on this broader catalog, but carrying particular weight in British hill farming specifically. The average age of British farmers has been documented over recent years as skewing genuinely older, a considerable share of hill farming families in particular facing a genuine, difficult question about whether a younger generation is willing to take on a business facing exactly the kind of fundamental income uncertainty the subsidy transition described throughout this breakdown has created. A business that, even before this specific transition, already demanded genuinely difficult, physically demanding work across some of the harshest farming conditions in the entire country, for a return that has, for decades, depended more on government policy than on the farmer's own skill and effort alone. There is a structural choice sitting underneath all of this, worth understanding. And it is the decision between diversifying farm income beyond traditional livestock sales and subsidy payments entirely, toward farm tourism, holiday cottage lets, farm shop and direct meat sales, or agricultural contracting work for neighboring farms, versus remaining focused purely on traditional livestock production and adapting as best as possible within the new environmental payment framework. A considerable number of hill farming families have pursued exactly this kind of diversification in recent years. Building holiday accommodation from converted farm buildings or developing direct-to-consumer meat sales capturing considerably stronger margin than selling livestock through traditional auction markets alone. A strategic response echoing the diversification patterns explored across several other rural business breakdowns on this broader catalog, building revenue streams less directly exposed to the specific policy uncertainty currently reshaping the traditional subsidy relationship at the center of this entire industry's historic financial model. There is also a wrinkle worth understanding around common land and shared grazing rights, a genuinely distinctive feature of a considerable share of British upland farming that has no real equivalent in the private, individually owned ranch model. This breakdown opened by distinguishing itself from a meaningful proportion of British upland grazing takes place on common land where multiple farmers hold defined, traditional grazing rights, rather than any single farmer holding exclusive ownership or exclusive use of that specific land. A genuinely complex, genuinely collective land management system that adds real coordination, difficulty to any individual farmer's decision about stocking levels or land use change, because a decision to reduce livestock numbers or convert grazing use on shared common land frequently requires some degree of agreement or coordination across every other farmer holding rights on that same shared land. A genuine structural complexity, the more individually managed, privately owned lowland farm simply does not have to navigate to the same degree. Now, here is where the financial fragility becomes just as important as a flock scattered peacefully across open moorland actually looks. Why is British hill farming, an industry with such a genuinely deep, genuinely centuries-old cultural and agricultural tradition, facing such acute financial uncertainty right now? The pattern is structural. The underlying land's genuinely marginal agricultural productivity means the actual sale of livestock has rarely, on its own, covered the full cost of running these farms. Decades of area-based direct subsidy payments quietly became the primary financial foundation an entire generation of hill farmers built their business model around. That specific subsidy system has now been deliberately, permanently phased out in favor of an entirely different, environmental outcome-based payment philosophy, and the marginal land many hill farms occupy is, in a genuine number of documented cases, now more valuable under the new payment system converted away from traditional livestock farming entirely than it is continuing to produce the sheep and cattle that have defined this specific form of British farming for generations. So how does a British hill farm actually generate income in plain mechanical terms once you strip away the romantic image of a flock grazing across open moorland? The core engine, historically, was livestock sales. Lambs and cattle sold through auction markets or direct contracts, plus the area-based basic payment scheme subsidy that for a great many hill farms represented a genuinely larger and more reliable share of total farm income than the livestock sales themselves. Minus the considerable ongoing cost of managing livestock across genuinely difficult upland terrain and weather conditions, minus tenancy rent where applicable. Today, that core engine is being actively rebuilt around a considerably smaller, phasing out direct payment, supplemented or in some cases substantially replaced by the new environmental stewardship payments. Plus, for the farms able to pursue it, diversified income from tourism, direct sales, or sporting activity. A genuinely significant structural transition that a considerable number of hill farming families are still, right now, in the middle of navigating, with genuinely uncertain long-term outcomes for a meaningful share of them. Now let us put all of this together and look at what actually happens across the different versions of this industry today, because this is where the two very different paths reveal themselves. In the more resilient scenario, a hill farming family has diversified income beyond traditional livestock and subsidy alone, building genuine additional revenue through farm tourism, direct meat sales, or sporting estate activity, has engaged proactively with a new environmental stewardship scheme to capture meaningful payment for genuine environmental outcomes the farm's own upland location is naturally well suited to deliver, and carries land ownership or a sufficiently flexible tenancy arrangement to actually pursue these adaptations without needing separate landlord permission at every step. Under those conditions, a British hill farm can navigate this genuinely significant policy transition and remain a viable, ongoing family business for the next generation. In the more difficult, increasingly common scenario, a hill farming family remains heavily dependent on a subsidy structure that is being actively phased out, occupies land genuinely poorly suited to generating meaningful income under the new environmental payment framework, faces genuine tenancy constraints limiting its ability to adapt, and confronts the same succession uncertainty facing so many family businesses explored elsewhere on this broader catalog. A combination of pressures that has already led a meaningful and growing number of British hill farming families to seriously reconsider whether traditional livestock farming on this specific land, under this specific new policy framework, remains a viable way of life at all. So if you do decide to take on a British hill farm, remember the one thing that actually determines whether it survives this specific, genuinely pivotal moment in its history. It was never really about how well you can manage a flock across difficult upland terrain. Generations of British hill farmers have already proven that skill exists in genuine abundance. It is about whether you can rebuild an entire farm business model around a fundamentally different government payment philosophy than the one an entire previous generation had quietly and for decades actually been depending on to keep the whole enterprise financially viable at all. If this kind of breakdown helps you see a business differently, that is exactly what this channel is built around. Subscribe to Money Framework British for more deep dives into how everyday businesses really make their money behind the scenes, and turn on notifications so you never miss the next one.